these baby boomers, they actually feel trapped. What do they feel trapped for? Because they don't want to necessarily do another 1031 exchange. They don't want new toilets, new trash, new liability. They're also trapped because 30 to 50% is going to be wiped out by capital gains tax and depreciation recapture, depending on what state they live in. We call this the perfect storm facing the baby boomers. So how do you solve that?
Let's talk about the Deferred Sales Trust and how this builds on that or exceeds that.
Yeah, so the big thing that baby boomers are facing right now, and this is kind of the big demographics, Clayton, it's the largest wealth transfer in the history of the world. In fact, according to the American Bankers Association, it's about 17 to 20 trillion will pass from one generation to the next in the next 20 years. And there's about 77 million baby boomers in the US alone. And every single day, about 10,000 of them turn 65 years old. And so they've made their wealth for 20, 30, 40, 50 years. In what? In business, in commercial real estate, and with their primary home. In fact, those three categories represent 50% of total net worth for the US, right? Commercial real estate, private equity, which is like business, and a primary home. So all three of those things in all of this large transfer, these baby boomers, they actually feel trapped. What do they feel trapped for? Because they don't want to necessarily do another 1031 exchange. They don't want new toilets, new trash, new liability. They're also trapped because 30 to 50% is going to be wiped out by capital gains tax and depreciation recapture, depending on what state they live in. And so, but they want to be done. They want to transfer it to the next generation. They want to enjoy their wealth. So the other part of this perfect storm that's sort of happening, that's what we like to call it, is the fact that you have real estate that's appreciated a great deal. And we're basically 10, 11 years since the big crash in '08. And they don't want to go through that again, right? They want alternatives, and they want to be done. They want to be diversified. They want to be liquid. They want to be able to invest in commercial real estate at any time, not be forced to have to overpay for a property. Also, interest rates are hovering near 40-year lows, which in some ways is sort of propping up values as well. And so we call this the perfect storm facing the baby boomers. So how do you solve that? Well, enter the Deferred Sales Trust. You can now sell a highly appreciated real estate. And by when I say now, I mean you could always have done this. In fact, this tax law goes back to the 1920s. It's just an installment sale, which is what a Deferred Sales Trust is. We just call it a specialized installment sale, where we're using the tax laws, and we've been tested and tried over a 23-year track record, thousands of closes, 14 no-change IRS audits. The largest deal was for over $100 million, but we've done veterinarians, we've done dentists, we've done apartment complexes, self-storage. And essentially, instead of doing a 1031 exchange, you can put it all into this Deferred Sales Trust at closing, of which all your debt is paid off of the asset. So now you're debt-free, and now you're liquid. And by liquid, what do we mean? Well, you could put it with your own financial advisor, or use one of our strategic partners and put it in stocks, bonds, mutual funds of your choosing. Now, I'm not a big stock bonds guy. I'm more of a commercial real estate guy. That's what I love. And this is the best part. Up to 80% of those funds can be directed to a syndication of your own or someone you know. So let's just say there was $1 million in the trust tomorrow. You just sold your business and it's all tax deferred. You would have had $600,000, but now you have $1 million. 80% of that, $800,000, the very next day can be sent to an LLC, of which you can purchase into a partnership or buy your own real estate, all tax deferred. So it becomes what we call optimal timing, which is the best thing. What you would have done in '08, of course, before the crash, had you known about this, we call this the Monday morning quarterback. You would have sold in '07. You would have paid off all your debt. You would have sat in this Deferred Sales Trust and very liquid, diversified, safe investments, because there's a lot of safe stuff you can put it into, and waited for the market to shift. And then bought properties at 60 cents on the dollar. In fact, that's what one of our clients did in Minnesota. He sold a large building, and in '06, he waited 5 years. That same building was foreclosed on. And through his trust, he purchased it tax deferred at 60 cents on the dollar, which, oh, by the way, it provides a brand new depreciation schedule, which is also something that the 1031 does not do. The 1031 only, you travel with the depreciation schedule. And this is an important point, because the number one reason, at least in my book, to own investment real estate is the ability to offset the income that comes in by the depreciation and not paying as much tax, but still having that income. And so in a 1031 exchange, unfortunately, it's traveling that schedule. So eventually you run out. Whereas with the deferred sales trust, it gives you a brand new depreciation schedule because we're not buying it through a 1031 exchange. So I'll pause there because there's probably a few questions.